I scoured the web to find the 5 best savings accounts out there, plus 1 extra bonus account. And some of the accounts on this list almost no one is talking about. Okay, first up on this list is the big boy, M1 Finance. Now you might be thinking, Andy, isn't M1 for investing? Well, yes, but also no. M1 has traditionally, yes, been an investing account, but they've started branching out and expanding. They have a spending account with a debit card, and now they're about to launch a savings account as well. Now, 2 quick caveats with M1. Number 1, there is an annual fee, but more on that in just a moment. Number 2, their savings account isn't available just yet. So why am I talking about an account that isn't even available yet?
How the f would you show me something if I couldn't have it?
Well, I'm pretty excited about this one, so I want you to know about it the moment it launches. When their savings account launches, it will have a massive, well, at least in terms of savings accounts, massive APY of 4.5%. And that's pretty rad. However, their checking account, which you can use today, has an already impressive 3% APY. So if you want to start using M1 before their savings account launches, you can put your money there and still earn a very respectable interest rate. Okay, now let's talk about that annual fee. Now, generally, I frown on any annual fees, monthly fees, or really fees of any kind that are associated with checking or savings accounts. However, with this fee, you get more than just a savings account. For $125 per year, you get access to M1 Plus. And when you do sign up, you do get a 3-month free trial, so you could always try it, and if you don't like it, cancel it. Now, membership to M1 Plus will give you access to this brand new 4.5% APY savings account, but also gives you access to way more than that, including a bunch of different types of brokerage investing accounts. You also get access to more trading windows and smart transfers. You get their rewards card with 10% cash back and access to their 3% APY checking account. You can also buy and sell crypto and a bunch of other features. But like I already said, the big one for me is that savings account, which is coming in 2023. Now, on that savings account, there is no minimum deposit, no minimum balance, and it is FDIC insured for up to $250,000. Plus, again, you get that mega 4.5% APY. Okay, so all that sounds great, but what is the downside? Well, if it's not obvious, the downside is that big annual fee. In my opinion, the M1 account only makes sense if you want all those other features associated with the M1 Plus membership, and or you're going to be parking a lot of cash in this account. In fact, you will need to hold at least $2,750 in this account just to break even, meaning that in 1 year's time, while holding $2,750 in this account, you will earn roughly $125 in interest returns. But you don't actually make that money because you're also spending $125 for the year for the membership. So you need to have more than that amount to actually earn money. But the real catch here is you also need to beat all the free accounts on this list. So with M1 and their new savings account, if you want to earn the annual fee back and beat all the free offerings on the rest of this list of bank accounts, you need to hold at least $25,000 in your M1 savings account. So if you want that big boy rate, well, you also need to save some big boy money. But again, that's purely looking at the savings offering. There are all those other features which could be very valuable to you as well. However, as a general rule with this M1 account, if you're going to be transferring less than $25,000 into the savings account, maybe you should consider some of the other ones on my list here. And speaking of other ones on my list, next up is VO Bank. Now, VO Bank is one I had not heard about previously, but they have great online reviews, and better yet, they have an online money market savings account with a rate of 4.01% APY. VO Bank is the online bank division of MidFirst Bank, which is actually the largest privately held bank in the US that's also an FDIC member. MidFirst Bank is based in Oklahoma City, Oklahoma, and was founded in 1982. Now, VO Bank is a great choice for a savings account because of that big 4.01% APY, but also because of their other features. You can open and manage your bank account online. They are FDIC insured up to $250K. The account only requires $100 to open, and there are no monthly fees. And like most other US banks with a money market savings account, you get 6 free withdrawals per monthly statement cycle. Beyond that, though, they are a bit light on features compared to other things on this list. They offer CD accounts, certificate of deposit accounts, but they don't have a checking account or any other normal bank features. VO Bank is very bare bones, so if you're hoping for an all-in-one solution, this is not it. But if you want a top savings savings account interest rate that's also a free account, well then this one might be a great fit for you. But again, if you're looking for more features, there's some other banks on this list that boast an array of great features and also have pretty great interest rates. Next up, we're going to steal from the rich and give to the poor in an app. Of course, I'm talking about Robinhood, and no, we won't actually be stealing, unfortunately. Now, the Robinhood offering is much like the M1 offering in that they have a great rate, but they do have a fee, in this case, a monthly fee. To get the Robinhood Gold membership, you have to shell out $5 per month or $60 per year, which means in this case, you will need at least $1,500 in the account to just break even, meaning to just earn back that $60 per year. However, before you write this one off, there are some key reasons why you might consider Robinhood over some of the other things on this list. If you are a regular Robinhood user, well then you probably from time to time have idle cash in your Robinhood account, so maybe it might as well earn some interest on it. And if you are that regular user, well then you probably enjoy some of the other benefits that being a Robinhood Gold member will provide. You get things like bigger instant deposits, access to professional research, access to level 2 market data, and access to margin investing at 7%. And some of you might already be a Gold member, so there's actually no break even because you're already taking advantage of the membership. This account is also one of the very best ones on the entire list if you're trying to park a ton of money on it, because they actually have FDIC insurance up to $1.5 million because they've partnered with 6 different banks to do that. And that insurance should give you a bit of comfort because Robinhood has been in the midst of a few different controversies over the past couple of years. And if something were to happen to Robinhood, the company, well, your money is still protected by that FDIC insurance. It's backed and protected by the US government. Now, the downsides to this account are pretty much the same ones as the M1 Finance account. It has that fee. So this account is really only for people who need to save a lot of money and or people who just love all the investing features and want those additional benefits. And then the savings account APY aspect of it is just a nice bonus. Now, while we're still talking about investment accounts, we should take a look at Wealthfront. Wealthfront is now offering a 3.8% APY on their savings account and a massive, absolutely massive $2 million in FDIC insurance. If you love investing your money Wealthfront style, meaning you give them your money, you tell them your risk level, and they do the rest, and they charge a fee, then you might as well use their savings account offering too while you're there. Wealthfront is what's called a robo-advisor, meaning they use software to manage the money based on specific parameters. Some people love robo-advisors, some people hate them. How Wealthfront specifically works is that you put your money in there and then they ask you specific questions about your risk tolerance and risk level. Then they use that information to automatically manage and balance your portfolio. It's usually a split between US stocks and other things like emerging markets, foreign stocks, dividend stocks, etc. I'm not personally a big fan of bonds, generally speaking. So unfortunately with Wealthfront, even if you select their highest risk profile, you still have exposure to things like municipal bonds. Another cool feature of a robo-advisor like Wealthfront is you get access to automated tax loss harvesting. Now, I won't get into exactly what all that means in this video, but I will say it's a way to creatively save money on your taxes if you've had some of your stocks lose money in a given tax year. But in this case, you don't have to think about it because they do it all for you automatically. Wealthfront offers a variety of different investment account types, from standard brokerage accounts, educational accounts, and even retirement accounts. In my mind, the biggest downside to Wealthfront is that they do charge a fee to manage your portfolio, a 0.25% annual fee. The other big downside to something like Wealthfront is what I've already said, which is that you're giving up control of your portfolio. You're letting them manage it for you. If you're someone who prefers to manage all that yourself, well, then it really doesn't make sense for you to use something like Wealthfront. But if you do like that style where it's totally hands-off, all managed for you, and or if you have a ton of money you want to save and get a really attractive return on, well, then the $2 million worth of FDIC insurance plus the 3.8% APY makes Wealthfront a very attractive option. Next up is SoFi, which is by far the most all-in-one, full-featured offering on this entire list. They have a savings account rate of 3.5%, which is towards the bottom of this list, but they do have so many other features that may sway you to wanting to use SoFi. Plus, a 3.5% APY is massive when you consider how sad some other accounts like Chase or Wells Fargo are. Wells Fargo will only pay 0.15% APY. And even worse, Chase only offers 0.01% APY, and they have the audacity to charge you a monthly fee for your account if you don't meet their requirements. Why would you use their account? Chase, worse service, and more expensive. And of course, SoFi is even better if you're looking for an all-in-one banking solution. They offer checking, savings, mortgages, investing, insurance, credit cards, and so much more. The big advantage here is if you use SoFi for your day-to-day banking needs, then you already have your money with SoFi, so it might make sense just to also use their savings account so you can move between their checking and savings offerings instantly. Like many others on this list, there are no account fees, no minimum deposits, no limits, also no overdraft fees, and yes, it's also FDIC insured. There's also a feature where you can get your paycheck up to 2 days early, and they offer a tool in the savings account called Vault, where you can split your money up to things like a rainy day fund, a home improvement fund, or a future vacation fund. There's even an automatic savings feature called Roundups that will automatically round up some of your transactions and save money for you. So if you had that turned on and you bought something that costs like $1.40, well, then it would automatically roll that up to $2, take that 60 cents difference and put it in your savings account for you. SoFi even gives you 2.5% APY on their checking account, so that while you have money there, sitting there waiting to be spent, you can also earn interest on it. Plus, right now, SoFi is offering a free bonus of $250 if you sign up for an account and you set up direct deposit with them. Now, as far as the downside, the main downside with SoFi is just that you can get a better interest rate elsewhere. So in my mind, what you need to weigh here is the convenience of having all of your stuff, all your banking needs in one place versus having a slightly higher interest rate in a savings account. Honestly, though, convenience is worth a lot. So that was my top 5 accounts, but here is account number 6, which is a bonus, and that is Yotta. Yotta offers an average annual savings rewards of 2.7%, which is the lowest on this list by a decent margin. However, how they deliver that reward might just pique your interest. Notice I did not say that their annual interest rate is 2.7%, but rather it's their average annual savings reward. And that's because Yotta doesn't have a standard interest rate like the other banks on this list. Instead, they operate like a lottery system. You get awarded tickets for saving money, sharing the app and things with your friends and family, and doing other tasks. Then they have regular lottery drawings, and if your numbers on your tickets match, well, they can win all the way up to $1 million. The reason they do this is to make the entire savings thing fun and to encourage people to save more money. And it's not an all or nothing either. It's not either 0 or $1 million to some very lucky person. You can regularly win smaller amounts or even medium-sized amounts. To give you an example, I have about $1,200 in my Yotta account. In my past week, I won $1.15, and annualized that works out to over 4.5% interest rate. Now it does change every week, but it has been consistently pretty good. Plus, there's always that chance to win a much bigger prize. Yotta is very savings focused, but they do have other features. They have a debit card, a credit card, paycheck perks, and they even have savings buckets and other features. They even allow you to take your tickets and pool them with your friends or family or strangers to greatly increase your chances of winning. And they now have a feature called the iBonds bucket. If you're interested in effectively locking up your money for a year into government iBonds, then you could earn 6.89% at least for the next 6 months before that rate changes. And you can do that without having to go through the government website, which is pretty convoluted and hard to use. Yotta has no fees, they're FDIC insured, and you can sign up for an account in like 2 minutes. As I see it, the biggest downside though to Yotta is that their average return is much lower than the rest of the accounts on this list. But if you're motivated to earn more tickets, then your return could actually be a lot higher than average. Plus, there's always that little chance of maybe winning $1 million. Really though, there are no wrong answers here. It's just whichever one of these is the best solution for you. But you can also open all these accounts and just try them out. There is no penalty for opening up multiple savings accounts and just trying them. However, a savings account really isn't worth very much if you don't have money to put in it. So you need to watch this video here to see how to save $5,000 to $10,000 as fast as possible and erase that stress from your life. Okay, that's it. Goodbye.